I took a trade on USD Canadian. I was a little bit mad at myself for the confluences because they weren't good. There was one confluence that I used and that's it. And it was this fair value gap right here, this fair value gap right here. My idea was that price was bullish. You could see it, that we are bullish right here. And on top of that, previous key levels like so were taken out. Obviously, now that I'm thinking about it and watching back the video, I just did my only confluence and it was not good. I entered in right here off of this fair value gap. You can see that it was re-entered right here, but then the very next 5-minute candle, you could see it was invalidated. And I should have seen that. And you know what else I should have seen? It was that there was more fair value gaps deeper down at deeper levels, which were waiting to get taken out as well. And on top of that, what else should I have seen? I should have seen this equilibrium from this sweep high to this sweep low. I'm gonna move it so you can see it. From this sweep high to this sweep low right here. Coincidentally, what do we see else right here? We see a fair value gap on the 5-minute, which was retraced right here. This fair value gap that was retraced and price entered back up. Funny enough, after making this trade, I saw what I made the mistakes of, but I did not want to overtrade. And if I did overtrade today, I would have been up. Or that day, I would have been up. That's the funny part. It's okay that I didn't overtrade because long term, I know that overtrading is bad for you. And it will most times get you into a naughty situation that you don't need. So, it is what it is. Shouldn't have lost my first trade. Should have been more patient. And number 3, don't use 2 confluences to trade. Those are 3 lessons of the day. Be patient. Number 2, don't have just 2 confluences for the day. And number 3, which I already forgot, I'll be seeing it when I'm ending this video, but I'll put it down on the board right here. Oh, look at the bigger picture. We'll just say that one because that's also important. If I looked at the bigger picture, I would have seen that there was fair value gaps lower down and straight into an equilibrium zone with a sweep high, sweep low, choppy price action. And even if we move this a little bit more ahead, if I didn't even enter right here and I entered in right here, we could see that the 50% equilibrium mark was actually taken out. Now let's go on a higher time frame and let's see what else we see. Let's go on the 15-minute. Okay, now that we're on the 15-minute, what else do we see? We see that this fair value gap was also here. So I'm going to redo that. This fair value gap was also on the 15-minute. When you see that the same confluence is on multiple different time frames, specifically like a fair value gap, well, then that's probably a sign that it will most likely be retraced. Don't enter in as soon as the fair value gap happens. Wait a minute. Don't do what I did. You can see with the fair value gap that I entered in at, which was, if I'm not mistaken, right here. Man, this was at the low of this fair value gap right here. And look, you could see that exact same thing that I said right here, where there's multiple fair value gaps in one area. There's one right here, one right here. Same thing with here, one right here, one right here. The only reason that this one was taken and this one wasn't was because, well, there's multiple reasons, but one of the reasons is because I wasn't patient. You should never enter off of one fair value gap. Number 2, the lowest fair value, so if you're going bullish, the lowest fair value gap that you see, which was this one actually right here, is probably the one that's going to get taken out. Not this one, not this one, but the lowest one. The same thing happens with the bears. Let's go to a bearish fair value gap somewhere. Bearish fair value gap. You see that this fair value gap was not entered. We see that this fair value gap was entered right here. It should be multiple different confluences. For here was equilibrium, fair value gap, multiple situations, and a bullish overall day. Those are my 3 confluences for the day. Obviously, I didn't use them right here, but I should have taken them right here. because I would have been up. And I actually had this trade running, or just about to run. I was like, I shouldn't overtrade. Next, at the same time, I'm gonna go over another trade, which I am currently taking right now. And I want to see what you guys think about it, all right? Trade starts at this mark right here. It is a short. And the reason it's a short is because the market was bearish. So as you can see, this high has not been overtaken. In fact, previous lows have been overtaken. So that's why I think it's bearish for the most part. It's a little bit choppy, but I think it's bearish. We swept out multiple liquidity zones, as I spoke before. And on top of that, and I guess because of that, I believe the market is bearish. And overall, it is bearish. Next, where is the trade that I took? The trade that I took, right there. Okay, so what did we use for this trade? Number one was equilibrium. From now on, I think I will only take trades using equilibrium if I'm ever scalping. So number one is equilibrium. Based on this sweep high right here and this sweep low right here, it allows me to get a re-entry, which was re-entered right here, to then short. I'm still in this trade, by the way. To then short to previous highs, or previous lows, I guess. What else did I use as a confluence? And what is now not a confluence? There was a fair value gap created right here, which when I entered in was accepted and also was in the same zone as the equilibrium zone, exactly at the 50% mark. And it's a bearish fair value gap as well. Further promoting the idea that this is a bearish short trade that market wants to go down. Next, what else did we see other than the fair value gap and equilibrium? And what else did I really use before entering into this trade? I used, there was multiple other fair value gaps and other zones which I was waiting for to get taken out. So there was a fair value gap right here that kept wanting to get played around with. I wanted it to get entered and then go down past these lows right here. So let's say that it did enter past these lows. What do we get? We get a liquidity sweep, which would help promote price to get it back into this fair value gap, this equilibrium zone, to then, further go down. The only problem is this fair value gap, as we can see, was pushed in front of this fair value gap. So that's not good. We have not had highs taken out yet, but we have had a retracement right here. And if we go to the equilibrium zone, it's still close enough to the equilibrium zone where it could happen. Currently, I'm like down 360. My stop loss is at 750, and my take profit is at 1,500, I think. Realistically, I'm probably gonna take profit like right here or something if I could, or at least move my move this right here once price moves around a little bit. So yeah, those were the two trades that I guess three trades. Number one trade I lost. Number two trade I wanted to take. I didn't take because I didn't want to overtrade. Number three is this current one, which I'm live in. I don't know what to think, and I guess we'll see tomorrow if I was upper decky or not. So that's it for the video.